All right, good morning, good evening, wherever you are in the world. Welcome back to another episode of the Coffee Hour, where we're going to be going over a bunch of news. We're going to definitely be talking about a bunch of news. I didn't have a whole lot of time to prep to go through every single soundbite, every single video, every single news article. Some of this will be kind of fresh even for me, so we'll just make it up as we go along, like we do with a lot in life. And yeah, this is going to be an interesting one, I think, because just from what I was seeing, right now in the broader picture, down in Davos, you have some of the Trump administration, officials over there, and they're basically attending the World Economic Forum. So it was pretty interesting. It was very interesting. When we talk about this whole new world order, that is, in my opinion, what's kind of shaping up right now. It's kind of shaping up to be that new world order. There's these old institutions that we all know and love. Well, maybe not love, but we all know. One is the UN. And that actually is coming into question. So it's crazy what's happening. The markets obviously did not like that. We had a red day today. The markets did not like what they were hearing. So there was a big prompt sell-off, but it looks like futures is up by a little bit. So we'll see if we continue to recover. Again, this is classic bad news on a Friday, right? Let the markets digest it on a weekend, and then probably some type of good news whenever the market opens back up. It doesn't look like there was any really good news in terms of, anything that would send the markets back up. Again, it was just more rhetoric around Greenland. So we're going to talk about all of that. So Jack Buller said, "Eugene, did you buy? Is that why you were down?" Probably. Yeah. I have that curse anytime I buy, the whole market crashes. That's exactly the real reason, right? I don't want you guys to be rich. No, honestly, man, I have been holding off on buying anything. I've really been trying to do this whole patience thing, and I think it's probably starting to pay off. I really think that there's going to be this big catalyst. I don't know what it will be. Maybe it's this Greenland thing. I really think there's going to be this big catalyst that's going to send the markets down. So we'll see. We'll see what's going to happen. Forget is done. Hey, welcome back. It's a great time to buy on the dip in stocks and crypto. I would agree if you're a buy the dip kind of person. Me, I have to try to remain a little more patient. I'm trying to practice this patience thing this year, where I'll buy on really, really big pullbacks. And I use kind of an AI to help me, kind of keep these guardrails in place. Maybe I'll show it on this stream if you guys haven't seen it. I'll show it on, later on. All right, guys. Let's get into it. Let's get into the show. There's a lot of stuff to cover. All right. Okay. First things first. All right. So we got the S&P 500 down quite a bit. All right. 2%, 2% down. Anytime the index drops about a percentage point, it's usually a bad day. Right. And then if it drops 2%, that's a really bad day. So yeah, markets had a pretty decent sell-off today. Again, it looks like they just started trading flat towards the end of the day, and it looks like it's starting to recover. Last time I looked at futures, so we'll see if any more good news comes out from that Davos meeting, or if Trump makes any kind of tweets, because he was tweeting up a storm. He was tweeting up a storm on Monday. I think he published like some tweets from the French president Macron, and he published something from the, I think, UN Secretary General Mike Rutke, or Mike Rutt, I think his name is. But yeah, this guy, man, he's just letting it all out. Like, he has no shits to give. Sorry for the language. All right. So anyways, S&P 500, we are down, not quite close to the 7,000 as we were. For Bitcoin, had a huge sell-off. This was a huge sell-off. We were at 95,000 a coin just over the weekend. We just got back there, and now we are down. Again, this is just the volatile nature of Bitcoin. It looks like Bitcoin had a pretty decent sell-off with the stock market because of this whole Greenland thing, right? And I've heard some narratives out there, and maybe it's true. I mean, you guys let me know what you guys think. But people will look at Bitcoin as like a higher convexity of QQQ, right? It's just a more volatile asset than QQQ. Because whenever typically, I guess, QQQ falls, then Bitcoin goes down with it. If the NASDAQ rises, then Bitcoin will go along with it. Now, I mean, just thoughts out there. Usually those assets, right, like money gets piled into like higher beta names, into technology whenever it's a risk on environment. So I suspect Bitcoin is probably no different, but I thought that was just an interesting thought to kind of share that I saw floating around, I think on X. All right, so the one asset that's doing really well is gold. Okay, gold up 3.78% for the day. So shout out to any gold holders. You guys are rocking it so far. Year to date, probably the best performing asset year to date, almost 10%, where we have Bitcoin barely at almost 1.5%. And then we have the S&P 500 actually in the red, all right? Down almost a full percentage point year to date. Okay, so real quick, fear and greed. We were at greed not too long ago, and now look at us. We are back in the neutral range. And I would probably suspect as more of this Greenland stuff continues to come out, we'll probably start to slip back into fear, right? It really depends on how this is going to, how the Trump administration is really going to approach this whole Greenland thing. This is really the central focal point for everything right now is Greenland. So if you guys haven't caught the streams in the past, basically, and if you're not up to date with what's going on with Greenland, basically the United States wants to acquire it. It's a strategic location, not only just to put, missile batteries, right? Maybe another base or two, right? To counter the potential for a Russian or a Chinese threat or aggression, but also Greenland sits on 36 million tons of critical rare earth metals. Okay, so that is also kind of part of why the United States wants Greenland. And aside from that, it's to wean the United States off of China, right? Get China maybe not completely, but at least off of some of their supply chain, so the United States is not so reliant on Chinese, metal. So this is an interesting time. This is a really interesting time, especially if you're an investor, especially if you're someone who's in the markets and you're trying to look for opportunities. I think this is a good time to be looking for opportunities because there's so much craziness going on. So if you're looking for like a long-term thesis, or if you're looking for, kind of how to play what's going on, for me, I'm more of a macro type of investor. I like to invest on themes. You have AI, you have data center capex, and now you have the debasement trade, and then now you also have metals, right? So something to consider for those who might be interested. All right, so we also have the VIX above 20. Okay, huge deal here. This is a big deal. All right, the VIX above 20. If it continues to rise, that could spell disaster in the next coming days. That could spell, probably a huge market pullback. The reason why the VIX is so important, I mean, you guys, this is it, right? This is more or less the fear and greed index, right? That's essentially what VIX is. Whenever VIX starts rising, basically it means fear, right? Like watered down, that's what it is. Whenever the VIX rises, usually you have sell-offs in the market. So this time is no different, right? You see the VIX right here jumping up pretty crazy. And we had to sell off in the stock market. Another point that's interesting for those who may not know. October, what was that? I put the stats in the Discord, but basically October and November, the VIX was hovering around 21 to 25. All right, and we had those really big sell-offs. So I think the VIX during Liberation Day was here. This is Liberation Day. All right, this is that week. We were hovering at 52. Okay, so you guys can see here. This is when we had the VIX up. And the VIX up again in November, and it looks like we're slowly starting to creep back up. But we'll see. Who knows? Maybe it'll come back down. You can't really tell, right? Here's another period where the VIX was at 20, okay? So it's just something to keep in the back pocket, right? Something just to be aware of, something I like to track. All right. We're going to breeze through real quick some of the news, and then we're going to get into the clips of kind of what's happening and some clips from the Davos meeting. Um, I see retire on dividends. Hey, welcome. Skeptic, welcome. Just buy silver and you're good. That's right. I mean, just buy silver and gold. You don't have to worry about anything. Let's see. Super Straight Guy says Netflix buy will be grand. 300 shares so far. God, I don't even have a single share. Okay, let's move on. All right, so Palantir, they had a deal. They struck a deal with Hyundai worth hundreds of $millions. So now they have a new contract under their belt. So that's always good. I always like to cover Palantir when they're in the news because Palantir is one of the companies that I'm pretty bullish on. So anyways, just real quick, Palantir Technology struck a deal with Korean company HD Hyundai. Is believed to be worth hundreds of millions of dollars. HD Hyundai, which operates in heavy industries, such as shipbuilding, heavy equipment, machinery, and more, will use Palantir software over numerous years, the news outlet added, citing sources familiar with the matter. Palantir began working with HD Hyundai in 2021. Since then, the South Korean company said it is able to manufacture ships at 30% faster rate using Palantir software. So again, for those who think what I talked about Palantir a while ago, and I was saying like last year when I really started covering Palantir, I was always saying Palantir is not just a defense company. It's not just a defense contract company. Eventually it's going to branch out and it's going to start being adopted by my thesis was financial institutions. That's where it'd really be able to make the bread and butter, right? They are going to start branching out, and we already see it in the United States, right? You have you have banks, you have these what was it, like Freddie Mac, I think they're using Palantir. NATO is using Palantir. Wherever the Army is going to be, the U.S. Army is going to be, and they need interoperability. Those allies are going to be using Palantir. But move beyond that, there's several financial districts within the world, right, within the globe. Right, South Korea, Japan, you have China, you have in China you have Hong Kong or Beijing, you have Singapore, in the Middle East you have Qatar, Dubai, in Europe you have France, and you have Germany. So there's all these other places where this software could be really, really useful. So again, it's nice to see that Palantir is not just relying on government contracts. It's branching out, and its software is being used across the board, right? So far, it looks like anything that needs to optimize, any company that needs to optimize manufacturing, it looks like Palantir is being adopted. So this is just a tailwind for Palantir and for Palantir's use case and for the future for thesis, the thesis that Palantir is going to be adopted, at least in my opinion. All right, just my opinion is all. Real Evil Duck says, my miners are doing fine. Don't know what you're talking about. All right, so moving on, the big one. All right, Greenland battle may royal markets, but buy tech winners. Okay, so Wedbush Security says, you guys know who Wedbush is. Usually you have Dan Ives that goes on CNBC, and he's a CNBC contributor. Usually he's the one that's talking about just buy tech winners. So he works for Wedbush Securities, but Wedbush basically said that it's going to cause a market sell-off, but you should still buy tech winners, right? There's nothing fundamentally wrong as of yet with any of the big tech companies, with any of the Mag 7, right? Usually there's just sentiment around it, right? The AI bubble, which even if you look up now, like on Google keywords or Google trends, AI bubble just completely evaporated. It's not even mentioned as much, if at all, really anymore. Whereas, November, December timeframe, it was like all the rage. And, I have I've shared my thoughts before about that. It was definitely a media blitz because it was hot and spicy, and it was getting a lot of people to sell their shares in a lot of AI companies. But there was still nothing fundamentally wrong. Like Palantir, again, going back to Palantir, they had really good earnings. A lot of the Mag 7 had really good earnings, but they still sold off. So is what it is, as they say. But anyways, analysts led by Dan Ives said that the market will open weak this morning as the street is showing natural concern around the U.S.-Europe tariff war of words with President Donald Trump focus on the contentious Greenland issue. All right, so that is going to be the issue pretty much for the rest of the week. Hopefully rhetoric does not continue to ramp up. We're going to go over some clips here in just a second that I think are very important to this whole, Greenland thing, because again, it was the main topic at this Davos World Economic Forum. So let's continue on. So again, shout out to anyone who's in gold. Excuse me. The rise of gold and the new American-led order at Davos. Okay, the world's political and business elite at Davos are preparing for a major shakedown as the United States arrives at the Swiss Alpine Resort with its biggest delegation in history. All right, the message from President Trump will be to either get on board with the American First framework or risk being sidelined or penalized from the emergent security and trade order structured around U.S. leadership. There's a lot at stake, especially with the Trump administration actively looking to expand American influence. So you had the Secretary of State, Marco Rubio, there. You had the Secretary of Treasury, Scott Bessent, Commerce Secretary Howard Lutnick, and Energy Secretary Chris Wright, and U.S. Trade Representative Jamieson Greer. So you had basically the whole lineup, the whole Trump lineup at this economic forum. So this was a big deal. Now I'm still like trying to look for clips or probably full interviews. We're not going to cover it on this channel only because it'll take too long, and I'm only going to be doing this for about an hour. But yes, this was a huge thing because now we can get into the minds of the Trump administration and like what is so important. And, we also get to kind of see what other, players in the space, because Canada's Mark Carney was also there, and he had a couple words to say. I heard briefly some of the clips that he had said. So there's like a big power shift going on and globally, right? And I know we're talking about stocks, but stocks, they react to global news, geopolitics, they react to all of that. And it also plays a huge part every single day. Because when you're looking at geopolitics and you're looking at the broader world in the context of what's going on, it impacts the stock market directly, right? If Europe all of a sudden dumps all of U.S. Treasury bills, right, which is a weapon that they can possibly use, or they exit equities or U.S. equities, I mean that's going to impact the stock market. Or if they place some type of restrictions on U.S. companies, like they're considering, that could have an impact on American companies in the stock market, right? Also, the whole idea behind Greenland, aside from again putting bases there, is so that the United States can go in and mine a lot of these minerals, a lot of these metals and such. So what would that do for metals-based ETFs? We covered one metals-based ETF, the Disruptive Materials ETF from Global X, DMAT. We covered that in one of the streams. And again, it's just, these ETFs, if you want to position your portfolio, take advantage of these big macro things, these big geopolitical things, you have to be aware of what's going on. So this is, again, why things in the broader world affect portfolios. Anyway, it's not just stock go up, right? Anyways, let's continue on. Biggest winning asset out of this whole meeting, as we already saw because we went here and we could see it, was gold. Okay, gold and silver are absolutely killing it. And last year I was covering during the lives, just gold just kept going up. Like you could not stop gold. Right. And then sometime in, I think, November, October timeframe, gold had a pullback. That would have been a perfect time to load up. Right. Gold had like a 10% pullback. That would have been a perfect time to load up. So if anyone did get in, congrats to you. Anyways, biggest winning asset, gold and silver, two precious metals, have been on a major rally over the past 2 years, which began as it became clear that President Trump would win the Republican primary and has only continued during his presidency. The attraction is rooted in tariff tensions, national deficit, and steep spending, all right, as well as safe haven demand from geopolitical volatility. There have also been big moves by global central banks to diversify their reserves into physical gold as a diplomatic tool, right? Or I'm sorry, gold as trade flows are increasingly de-dollarized and the greenback is used as a diplomatic tool. So, nations across the world are losing trust in the US dollar. They're getting away from the dollar, as kind of their safe haven, and they're moving into gold. Okay. We spoke about in earlier streams, and I have a video, not to toot my own horn here, but I have a video right here, right? The debasement hedge. I think this is a very important thing. I think it's a good starting point for those who might be interested to check that out, because it is real, right? The United States is $38 trillion in debt and rising, and it's going to continue rising, right? The OBBB, the one big beautiful bill, added $3 trillion onto that. And then you had Trump recently talking about increasing defense spending to $1.5 trillion. So that was an extra $500 billion. And now you have the Fed, who's also going to be injecting money into the markets, right? At some point, there's going to be quantitative easing, officially quantitative easing, right? And that's just going to be more money that's going to be in the markets, right? And all of this is going to send gold higher, in my opinion. All right. Gold, I think Bitcoin is also going to be a part of that. So there we go. So, all right. So at the same time, institutional investors and retail crowd have not wanted to miss out on these top trades, with spot gold advancing another record high overnight, rising 3%. One note about silver. This, and you know, I'm sure there's more people way more intelligent in this space than myself. But we were talking about how silver is kind of being manipulated. Like there's silver being sold and it's not even there, especially at paper silver, right? You had futures being manipulated. Not only that, you had the U.S. Mint stopping the sale of silver for a while. I don't know if they resumed it or not, but they had to stop the sale of silver. So it's pretty crazy what's happening in silver, and it had a really, really big push to the upside yesterday or today, I guess, your guys' time. So silver is you know, can it keep going higher, right? It's not so much that it's a store of value, at least in my opinion, because that's kind of gold's characteristic. It's more so that silver has other uses, right? It has industrial uses. Again, I always come back to the fact that, you know, EVs, electric vehicles, they use a lot of silver, a ton of silver in the batteries. Okay, so you have Samsung, who's really interested in acquiring, you know, these you know, the silver. Is it Samsung, or I think it is Samsung? Yes, you have Samsung that's really interested in acquiring silver. Also, along with the silver thing, right? Along with the silver thing, it's used not only in electric vehicles, it's used in electronics, used in all types of electronics. So again, there's an industrial use for silver. There's a new solid state battery that's coming out. I don't know how much silver is going to be in that thing, but it's probably a lot, right? And that silver has to come from somewhere, right? That's not silver being, you know, put into a chest of some sort or a safe, right? That's silver that can't be purchased, right, by you or I. That's silver that's in a car. So again, supply, what's going to happen to supply? So again, another reason why Greenland might be a little more important. I believe silver is one of the metals that is in Greenland. Okay, so hey, appreciate you, Eric. I don't think I've seen you on the chat before, so hey, welcome, love your channel, thank you, appreciate that. UI path, I'm not sure what you mean. Old quarters are made of silver dollars. There we go, that is true. Hopefully that boost will boost PLTW. Well, super straight guy, to be honest, you know, when it comes to Palantir, I think we're still going to be chopping up and down with the higher beta names, you know, the Palantirs. So, I mean, you just got to hold on fast, man. Just hold fast. Eventually, they will have their day, right? The high beta names, the Palantirs, the NVIDIAs, the Robinhoods, all those other types of companies, they're going to have their day eventually. Right now, it's kind of still this weird choppiness, this weird regime that we're in, right? This market regime that we're in. All right. So moving on. All right. EU, this is a big deal right here. All right. If you want to talk about choppiness and bloody red markets, this is, I think, going to add to that story. Again, fear, don't take this as fear. If anything, most of this is noise. Still be a prudent investor, right? Don't react to emotions. But anyways, EU said to weigh 93 billion pounds of tariffs on the U.S. in response to Trump's Greenland threat. Okay, the EU is weighing imposing $108 billion worth of duties on U.S. imports in response to President Donald Trump's latest tariff threat to countries that sent troops to Greenland. The tariffs had been prepared last year, but were suspended till February 6th. And just for context, there was an additional 200 troops that were sent to Greenland. You know, it's not, they're there to, defend, but really it's a deterrent. The United States, I could not imagine but you never know. But I could not imagine us attacking an ally, right? Especially an ally that's in NATO. They also discussed a bloc's anti-coercion instrument, also called the trade bazooka, which can limit the access of U.S. companies to the internal market, right? They're speaking of probably the EU in whole. Although I can't back that up. But yeah, probably the EU, right? Okay, so let's hop into some quick news Oh, so Scott Bessent had this to say about that bazooka, and I thought this was kind of interesting, all right? Hopefully you guys can hear this.
Just to follow into that, so you do not believe that the EU or the UK have any retaliatory financial instruments or measures in their bag that the United States should be worried about? Just to follow into that.
Just a flat out no. Cold as hell. Flat out no. So basically the question was, should the U.S. be aware or worried of any, basically financial warfare that Europe could use, right, in order to strong arm the U.S. into not going after Greenland. And again, it comes to those T-bills, right, the U.S. debt that these countries hold, and also equities, right? They can just dump all of that, and then that would obviously impact the stock market. So she was asking, should the U.S. be worried? And Scott Bessent said, no, they're not worried. So that's cold as ice. Real quick, Danish pension fund, and I think this was more or less a tale of what's to come if nothing positive comes out from this Davos meeting. I got to get a sip of coffee, guys. I'm dying over here. Okay, so Danish pension fund to sell $100 million in treasuries, citing poor U.S. government finances, right? They said, the Danish said, oh, this has nothing to do with, the trade or Greenland. This has nothing to do with that. We wanted to sell these treasuries because they're underperforming, right? Absolute BS, right? They're doing it because of what's happening. And I think what they're trying to do is rally other countries to do the same. Or this could just be a warning shot, right, to the United States saying, hey, if you keep this crap up, we're going to start offloading your debt, right? And that's not going to be good for U.S. Treasuries. U.S. Treasury, 10-year, 20-year, 30-year, that's going to start spiking like crazy. That could end up going 5, 6, 7% just on the 10-year, right? So when you talk about, when you talk about interest rates, mortgage rates, that kind of stuff, all of that becomes infinitely more expensive, right? Depending on how much treasuries get dumped. So anyways, Danish pension operator, and I'm going to screw this up, Academiker Pension, said it's exiting U.S. treasuries because of finance concerns as Denmark spars with President Donald Trump over his threats to take over Greenland. Anders Scheld, Academiker Pension's investing chief, said the decision was driven by what it sees as poor U.S. government finances, which is absolutely true. I mean, we're $38 trillion in debt. We can't exactly pay that off. I think it's $1.2 trillion in interest alone every single year that the U.S. government has to pay on that debt. So not good, right? America's debt crisis, but also it comes as tensions escalate between the U.S. and Denmark. Denmark is the one that sent 200 additional troops to Greenland after Trump's latest threats to tariff European countries if Greenland and Arctic territory of Denmark isn't sold to the United States. It is not directly related to the ongoing rift between the U.S. and Europe, but of course, that didn't make it more difficult to take the decision. So again, I think this is a broader move, right? This is just a warning shot across the bow from the EU or from these countries who don't want to give up Greenland. This is just a simple shot, right? But we also had, and we're going to cover here in a second, Scott Bessent say some really interesting things as well. So real quick, let's cover Howard Lutnick, who was also at the Davos meeting, like we mentioned earlier. So we'll just listen to the clip.
Well, I think you should start at a much higher level. Okay. We are in Davos at the World Economic Forum. And the Trump administration and myself, we are here to make a very clear point. Globalization has failed the West and the United States of America. It's a failed policy. It is what the WEF has stood for, which is export, offshore, far shore, find the cheapest labor in the world, and the world is a better place for it. The fact is, it has left America behind. It has left the American workers behind. And what we are here to say is that America First is a different model, one that we encourage other countries to consider, which is that our workers come first. We can have policies that impact our workers. Sovereignty is your borders. You're entitled to have borders. You shouldn't offshore your medicine. You shouldn't offshore your semiconductors. You shouldn't offshore your entire industrial base and have it be hollowed out beneath you. You should not be dependent for that which is fundamental to your sovereignty on any other nation. And if you're going to be dependent on someone, it darn well better be your best allies. Okay? And so that is a different way of thinking. It is completely different than the WEF. I viewed the WEF as not a flagpole in the middle, but in fact, they are the flag. Whichever way the wind blew, so it blew. You should have solar, you should have wind. Why are you going to do solar and wind? Why would Europe agree to be net zero in 2030 when they don't make a battery? They don't make a battery. So if they go 2030, they are deciding to be subservient to China, who makes the batteries.
What do you guys think, man? Let me know in the chat. That was pretty crazy. Like that is pretty crazy. Europe does not even make a bat. That is wild. When he kept saying WEF, like I thought he meant West, but World Economic Forum. Anyways, guys. We have another clip from Unusual Whales from Scott Bessent. So let's listen in on this one. And so he's explaining basically why the markets have been going down. It's not just this. This is probably a piece of that, but it's not just this. So anyways, let's listen.
I believe the markets are going down because the Japanese bond market had a 6 standard deviation move for the past 2 days. That would be in their 10-year bonds. I've been in touch with my economic counterparts in Japan and urged them to take the necessary measures to stabilize their bond market, but that's spilling all over into all bond markets. German yields are up, French yields are up, U.S. yields are up, again, it's mostly the Japanese bond market, got nothing to do with Greenland.
I don't know if I buy that. I don't know if, the stock market going down is because of bonds. I mean, I think it's a piece of that, but who am I? I'm not, a 30-year finance veteran like Scott Bessent here. But, hey, I think still Greenland, all the rhetoric that's going on, this could potentially turn into something worse if it goes that way, right? And the markets will definitely have a huge sell-off if rhetoric turns super negative, right? If Trump just one day wakes up and says, you know what, we're going to just place troops in Greenland and call it a day. I mean, how's the whole world going to react to something like that? So we have Scott Bessent talking again. Let's listen in. So this is him basically talking to countries who are getting all worried about Greenland, right? And they're starting to ramp up their counters to the United States, right? So this is Scott Bessent just talking about this. Just let's listen to the clip.
Well, again, I would say this is the same kind of hysteria that we heard on April 2nd. There was a panic. And what I'm urging everyone here to do is sit back, take a deep breath, and let things play out. As I said on April 2nd, the worst thing countries can do is escalate against the United States. Back then, only one country, China, escalated. We ended up in an unfortunate tit for tat in tariff raises. We ended up at 145, 125. Through President Trump's good relations with Party Chair Xi, we have managed to stabilize that relationship and given great certainty. And as far as your question about the additional tariffs, what President Trump is threatening on Greenland is very different than the other trade deals. So I would urge all countries to stick with their trade deals. We have agreed on them, and it does provide great certainty.
So this is Scott Bessent telling countries, don't get ahead of yourselves. Let things work themselves out. don't start up with this, tariff game, this counter, trying to leverage anything against the United States. When it comes to Greenland, just chill out. This, I was talking about this in the Discord, but this could be, classic, Trump negotiation where you create the problem, right? And then he sells the solution. So it could turn into, we're going to be sending troops to Greenland. We want Greenland. There's nothing you guys are going to be able to do to stop us from getting Greenland. We're adamant about getting Greenland. And it's like, okay, fine. How about this? We're not going to take over Greenland. We're not going to do a hostile takeover. How about this? How about you just let us build a couple bases there, and maybe we'll also open it up to mining. How about that? Right. So either way, the United States is going to get Greenland in one shape or another. So is this classic, Trump negotiation, freaking art of the deal garbage? I don't know. You guys tell me. It's crazy what's happening on the world stage. All right, so we have another clip. This is actually from Trump talking about NATO. So let's listen in.
I think something's going to happen that's going to be very good for everybody. Nobody's done more for NATO than I have, as I said before, in every way. Getting them to go up to 5% of GDP was something that nobody thought was possible. And pay. At 2%, they weren't paying. At 5%, they are paying. And they're buying a lot of things from us, and they're giving them, I guess, to Ukraine. That's up to them, but they're giving them to whoever they're giving them to. But they're buying a lot. I think that we will work something out where NATO is going to be very happy, and where we're going to be very happy.
You see what I mean? Like, the market's sold off. This might be a good opportunity to buy. Trump seems very hopeful, but again, reality could be something different, right? Perception and reality. He's saying, oh, they're going to be really happy. This is really good. Because this is really dovish talk. But we don't know what's happening behind the scenes, right? We just don't know. Like when the whole China-U.S. debacle was going on, Trump was saying, oh, yeah, I spoke with Xi. We're good friends. We have the best relationship ever. People always tell me they've never seen a better relationship, right? But then you have the Chinese spokesperson for the Xi administration basically saying, no, they never spoke. They never talked. So I don't know. I mean, you guys tell me, right? So this might be just a method to calm the markets so the markets don't continue selling off because the Trump administration, whether they want to admit it or not, they love a green stock market. All right, moving on, one last clip, and then we'll move on to something from Ray Dalio. If you guys don't know who Ray Dalio is, really interesting person. He was the founder of Bridgewater Associates, but he had some things to say about what's going on right now in the world. So first, let's listen in on Scott Bessent. All right, he's saying that the single biggest threat to the world economy is 97% of advanced chips are made in Taiwan. We spoke about Taiwan, the strategic importance of Taiwan, and why TSMC is moving their chip manufacturing to the United States, right? This started back in the Biden administration, and they basically wanted to take, a chess piece off the board in case China wanted to invade Taiwan. They would be able to capture that capability. TSMC is one of the most, if not the most important company in the world when it comes to semiconductor production. So by moving it into the United States, it kind of protects, the supply chain. So let's listen in on this.
Conductors, I would say that the single biggest threat to the world economy, the single biggest point of single failure is that 97% of the high-end chips are made in Taiwan. If that island were blockaded, that capacity were destroyed, it would be an economic apocalypse. So we are conductors.
If you guys didn't know, by the way, there was some recent drills by the Chinese Navy on a scenario where they did blockade Taiwan, right? So they actually had their naval presence in and around Taiwan. So this was like really, really big news. It happened, I think, about a month ago, if I'm not mistaken. But China does intend to invade Taiwan at some point. They've made it very clear. They've talked about it for years. There was a Navy admiral on record who is in charge of Indo-PACOM saying that, yes, the Chinese is ramping up to invade Taiwan. They've built ships that would get over the barriers, over the sea barriers, and onto the beaches of Taiwan. Like they are really thinking this through. The Chinese, that is, in terms of how they're going to invade and the type of equipment and how quick that they would need to get a beachhead. So this, is potentially going to happen. And this is why, again, this plays into the whole geopolitics stuff, finding some way to weaken China or to deter China from invading Taiwan and to kind of get TSMC to invest in the United States, but also move their manufacturing to the United States, because that is one of the most important companies, again, in the world. All right. So we're going to listen in. Actually, before we go any further, let's check the poll. So the question was, is this Liberation Day 2.0? All right. With everything we just talked about, with everything going on, is this Liberation Day 2.0? All right, 43% of you says, oh yeah, bloody red markets are coming, okay? And 43% of you said, nah, this is classic noise. And then 13% of you said, what's happening in Greenland? So I'm gonna probably go with a 43% that says, nah, this is classic noise. I know that's kind of a surprise, because I do think that this could be a catalyst that ends up, terrorizing the markets. But I also think that, with the way things are going right now, at least the first day out of Davos, this could just be noise, right? This could just be noise, which created opportunities. Because if this was a dip worth buying, and then we just, continue to grind higher, this could be that good opportunity for a lot of people. So if anyone did buy the dip, congratulations. All right, so I see Odysseus Fort. Hey, welcome back. Trump and Putin should meet and shake hands just to make Europe nervous. The last time Trump and Putin shook hands, we flew a B-2 Spirit bomber over him, and it wasn't for a parade or to show him how cool Putin was or how nice the United States is. I think that was a signal to Putin that if you continue to FAFO, a couple pixels in the sky might be missing from, over Russian airspace. I mean, why else would you fly a B-2 Spirit bomber over, a foreign president? Odysseus 4 also says Eastern Europe has no large amounts of resources. Russia and the United States has the largest amount of resources in the world. I don't know about that. I mean, I personally don't know about that. I know the United States obviously does, but we kind of suck and have to outsource and obviously rely on other countries for certain resources. It depends what resources too. Are we talking metals? Are we talking oil? Are we talking farmland, agriculture? What is resource, right? We have to define that. But if they were to shake hands, I think that would kind of shake Europe a little bit, or at least NATO. Skeptic says, all right, that's it. Full port into SGov and REMX. So for those who don't know, REMX is a metals ETF. We could pull it up later. But yes, SGov is a 0 to 3 month Treasury T-bill ETF, so it's very flat, very stable. If a dollar in there is not going to be, 90 cents or 80 cents. There's no NAV erosion on SGov, right? Okay. And Real Evil Duck says Ukraine has more than Greenland in terms of resources. That is absolutely a fact, because Ukraine, for those who don't know, is dubbed the breadbasket of Europe, right? It was dubbed the breadbasket. And actually, before the Soviet Union collapsed, Ukraine is where a lot of the R&D, a lot of the technological R&D was done, right, for the Soviet Union. So when the Soviet Union collapsed and broke up, you had Ukraine become its own state, its own country. And they kept a lot of that. They actually at one point had nuclear weapons that the Russians just left there. And then they went back in and took them out. As a matter of fact, since we're talking about it, Ukraine, I got to give a shout out. You guys, if you have not watched HBO's Chernobyl, I recommend you guys watch it. It is a fascinating drama series. It's only, I think, like 5 or 6 episodes. They're about an hour a piece. Really, really good. I just finished it last night. And man, I am blown away by how sad that whole scenario played out. Like, it was really, really sad what happened. But anyways, okay, neither here nor there. Let's move on to Bridgewater. Okay, so this is Bridgewater's Ray Dalio on capital war fears. Okay, he's talked about this idea of this new world order, and he has a video out on YouTube for free that I really recommend people check out to understand kind of what's going on. He called this way back in like 2021, 2022, I think, even earlier than that. He said that it's not Russia that's going to be the biggest rival to American, hegemony or American influence. It's going to be China. China is going to be a part of that, right? He studied empires for the last 500 years or something, and he's come to the conclusion that it's going to be a China v. U.S. war, not in the sense of, attacking each other with, missiles and troops, but it could be financial warfare. It's who's going to control the system for the next, 50, 100 years. And it looks like it's starting to come to that point, because you have countries that, the BRICS nations, you have BRICS that is trying to get off the US dollar, if not they're already off the US dollar. And you have other countries that are starting to lose trust in the US dollar because of how much debt we have. And, we just keep piling it on, so people are losing trust. And then now you have an administration that is kind of alienating a lot of our allies, a lot of countries that we do business with. So countries might start to think, we don't need anything from the United States. Let's just get off the United States. Let's start our own, collective, polar world, right? Our own, where we're just, you have like the whole European nation becoming their own, centralized power, right? So there's a whole lot of stuff out there. It's really fascinating. But anyways, Ray Dalio stuff, recommend you guys check him out. So let's listen in. It's about a 7-minute clip.
Okay, we want to kick things off this hour with Bridgewater's founder, Ray Dalio, author of multiple books, the latest of which is How Countries Go Broke. We've been having this conversation here at Davos now for many, many years. It's great to have you here. I want to actually just launch into the same conversation we were having basically during a commercial break, which is you've been talking for a long time about a breakdown in the world, a breakdown in societies. Joe had asked you, are we there yet? And you said, yeah, we're here. It's happening.
Let's step back from the sensational and be clear about what I mean. The monetary order is breaking down. Okay. What I mean by the monetary order is that fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way, and that there was a change. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact you could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars, there are capital and capital wars. And so as we're looking at that, and you reported what the stock market and so on, but you didn't report that the gold market is also up 3.
We did say that earlier this morning.
Okay.
It's up to
But
record levels again. And silver.
Is you look at what is happening and why it's happening and who's buying it. So let's just take a moment on that capital war issue, okay? We know that both the holders of U.S. dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? So if you have other countries who are holding it and they're worried about each other and we're producing a lot of it, that's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking. And now if you take the conflicts, you can't ignore the possibility that capital wars, in other words, maybe there's not the same inclination to buy U.S. debt and so on. We at least need to talk about those possibilities and find out who is buying and selling what that is behind these market movements.
And who do you think is behind it?
Well, it's known. It's very clear. You're seeing both the central banks. I can take you down to the specific central banks and what they're doing, okay? They are, because they're, what is money? What was
We're
money?
increasingly buying our own money. That's the lesson of all this.
And the other countries, central banks, and sovereign wealth funds and others are buying gold,
right,
are buying these assets as a diversifier. Think of it, gold is not a metal to speculate on. It's the second largest reserve currency. It has been the reserve currency, okay? So there's a money, and we're talking about, it's common conversation, about what is money. Is it Bitcoin? Is it digital? How does it work, right? So we need to talk about the value of money.
But are there forces at play where this is just predestined to happen, given sort of the way you look at cycles? Or do you say there are things that the administration's doing or that others are doing that are creating this moment, whether it be tariffs? We just had Sergio Armati from UBS on. He said, you can do a lot of things, but at some point there is a tipping point. You can't do too many, and maybe we're there.
There are circumstances that have happened repeatedly that are analogous in history that you can look to. When you have a certain amount of debt, okay, and that means others are holding it as debt assets, such as bonds, okay, and you have to sell a lot more. There's a supply-demand issue, okay? Also, when they're holding that, they have to believe in that in terms of the supply-demand. And when you have conflicts, international geopolitical conflicts, even allies do not want to hold each other's debt. They prefer to go to a hard currency. This is logical, and it's factual, and it's repeated throughout history.
So what would Ray Dalio do with his money right now?
Well,
Gold?
I have had, let me answer it this way. If you don't have any views on markets and you say, what should be my strategic asset allocation mix, you would have a diversified portfolio of certain assets that would diversify each other. And then the question is, what would gold play? When you ask me what gold, it would represent between 5 and 15% of a normal portfolio because it does very well when the other assets don't do well. It's an effective diversifier. So if you had no views of the markets, that's what you would have. And central banks would have a higher percentage than they currently have, okay? So I would start with that view. Now, do I have, then you make tactical tilts from that, right. Okay? Now, in my tactical tilts, I have been clear for quite a while that I would tilt away from bonds and bonds, and I would be tilting toward gold and have a greater than normal amount of that. I'm also believe that we're in a...
Despite the run-up already, meaning you think it's still got...
You always keep, what is my amount that I'm going to keep? Okay, so don't pay so much attention. If I look at the run-up and I take what are the positions held by the entities that should hold what positions, they're still short of gold. Okay? So, but still, I'm not saying that it's what amount should I hold. Okay, don't be overly active, and I don't think most people should be overly active, but do they hold the right amount to diversify? And the other part of the answer to the question is that I believe that we are in a wonderful technological revolution in which there's going to be new tech creating great disruptions, and not so much from, there are the hyperscalers and so on, but there's the impact of those on the companies that are going to use that and so on. So I want a part of my portfolio to be in those kinds. So I'm kind of in a mixture of new tech and diversified with an element of gold. That's where my biases are. Forget my conclusion. Just know what neutral is. You know, if you are a China, a Japan, Europe, okay, what do you do with your portfolio? What do you have?
That was so good. That was so good. So he's basically saying that portfolio should have between a 5 and 15% allocation to gold. For me personally, I have about, I think, hovering around 10%. I think it's like 9.5%. So, he's talking about diversifying. A lot of people have difference of opinion. Some people say concentrate. Some people say diversify. Some will say diversification is the only free lunch. Others will say diversification equals worsification, right? It's all whatever you guys decide. Me personally, because I want to take advantage of a theme, i.e. the debasement trade that's going on, plus, just what's going on in the broader world. I think gold made sense for me in my portfolio. It's awesome to hear him say that, he's also more or less bullish on this whole AI trade, right? He's really bullish on the whole AI trade. So it's really cool to hear him say that. So again, guys, I like to listen to these smarter people because I'm definitely not the smartest person in the room, sharpest knife, brightest candle, whatever you want to call it, or brightest light, I suppose. So whenever Ray Dalio speaks, I like to listen to at least what he has to say. Some people will call him a quack, that he's kind of like way out there. He's past his prime. He predicted, was it the 2008, 2009 correctly, but he hasn't had any real wins since then, right? A lot of people like Michael Burry still hang their hat like on, oh yeah, I predicted that 2008, 2009 crash. They became very, very wealthy. But, what did they do after the fact, right? So I'm not criticizing. I'm just saying, what I hear and what I see. But yes, anyways, Ray Dalio talking about central banks increasing their gold reserves, all right? Increasing their gold reserves for what's to come, right? I think that is a bullish signal for not only gold, but probably Bitcoin. I hate to keep saying Bitcoin because it's not doing well, but Bitcoin for sure. Because, Bitcoin is a part of that debasement trade. Investing in Bitcoin is a bet against fiat currency. Now, will it become the reserve currency of the world? Highly doubtful, very highly doubtful. We'll probably move back to gold before we move to Bitcoin. But yes, those are just my thoughts around this. Put it in the chat if you guys have any thoughts about having gold in your portfolio. If you don't have gold, I know there's a lot of high income ETFs out there. You have, KGLD from Kurv, KSLV from Kurv. Those have been gaining a lot of popularity. Mining ETFs have also been gaining a lot of popularity. So let's go back to, and I forgot to prepare it while you guys were listening to this video. But let's take a quick look at REMX, the REMX ETF. All right, coming back to that. All right, so coming back to the REMX ETF, this is from Van Eck. This is a rare earth and strategic metals ETF. So you get a little bit of best of both worlds. The one thing personally I didn't like about this ETF, and I'm just going to say right up front, but it is a good ETF. But one thing I did not like about this ETF in particular was their exposure to China. All right, I'm just, call me anti-China government, whatever you want to call it. I just will not bet against America. But, you know, Chinese mining companies have been very profitable, especially for those who've been in the space. You guys have told me that Chinese companies have been profitable. So I'm inclined to take your opinion on that. Where is this thing? Is it, yeah, country by weighting. So it's 32% to China, which again, I don't feel comfortable with that much exposure to China. I'm fine with everything else. So I invested into a different ETF that's more, you know, ex-China based. But yeah, this is not a bad way to get exposure, right? To those assets, to rare earths and strategic metals. It's not a bad way to just own the basket, right? Instead of looking for individual companies or miners or buying spot price, you know, commodities like gold, silver, copper, platinum, et cetera, you could just buy a basket and then just leave it there, right? Be happy with that. Year-to-date return is so far 20%. Look at that. Since January 2026, right? Or as of January 2026, year-to-date returns of 20.56, okay? So let's take a look at that if we can. REMX ETF. I mean, look pretty good, right? Looking pretty good, up 16.58%. Ooh, I gotta stop smoking. Okay, so up a lot. So again, this is for those investors who want to get in on metals but don't know where to start. This would probably be a good starting point. You could also, of course, look at, you know, the GLD ETF, right? This is just gold, spot price gold ETF. It's just a spot price for gold. There's also SLV. And these are just really easy ones, right? These are ones that are just very common out there. So there's the iShares Silver Trust. All right, but the thing is, just make sure you're fully aware of the tax consequences that come with investing in spot price commodities like silver and like gold, because they're not taxed the same way as like selling a stock. Okay, because there's a, depending on where you are in the world. All right, in the U.S. They put this, you know, collectibles tax on this. They treat it as a collectibles, I guess. So if you buy it, just be aware of the tax consequences that come from selling it short or selling it over the long term. So the annual total return for BAR in 2025 was approximately 64% NAV basis as reported in historical performance tables. That's coming from Michael Hawk. Hey, appreciate you joining the channel and dropping that in there. So let's take a look at BAR. That's Barrick, right? No, that's not it. BAR, this can't be it. Is this it? I didn't even know Granite Shares had this. All right, well, that's cool. So 1 year, yeah. I really had no idea that Granite Shares actually had a gold trust. That's new to me. That's awesome. Are they to the moon again in 2026? We'll find out. I mean, so far it's off to a pretty strong start. Pretty damn strong start. So gold is just ripping it, man. Gold is just ripping it. So yeah, you know, there's another ETF for those who might be interested. And it looks like, let's take a quick look at futures because I am interested in what's happening in futures land. So it looks like we got a little bit of a recovery going on. So that's good. So far, we're up 3.4% or 34 basis points on the NASDAQ futures, 39 basis points on the S&P, and 28 basis points on Dow futures. So it looks like we're doing good. Gold, oh my God. Gold up almost 5% in futures. Absolutely insane. Absolutely crazy. It looks like silver is having just a slight pullback. I mean, they ripped when market opened for the overnight markets. Monday into Tuesday, they freaking ripped. Well, ladies and gentlemen, I think that'll be doing it for me. We covered a lot in this video. Definitely covered a lot in this stream. I mean, I'll stick around for another 10, 15 minutes. I'll open it up to the floor. Is there anything in the chat you guys want to talk about? I've been known to rant and vent when it comes to high yield products. I do own a couple of high yield products myself. I went on this really epic, rant yesterday for Ulti, so I won't rehash that one. You guys can check out the stream. It was towards the end, but yeah, I went on this really epic rant for Ulti yesterday. I don't think I'll be doing that again. Let's see. SIL is Silver Miners. This one is one ETF I do hold. And you guys could check this out right here. Oh my God, look at that. That was insane. Look at that run up. That run up was crazy. Eric Markward says favorite weekly paying ETF. Well, I'm a big fan of Palantir. I do like PLTW. I still hold PLTW. It is still one of my favorite ETFs that I hold. Yeah, the roundhill stuff is the weekly pays are taking kind of a beating right now because of obviously what's going on in the broader market. I mean, we have a lot of choppiness, a lot of volatility, up, down, like crazy. So that's obviously making it harder for these ETFs to have any type of gain, right? Any type of gain. But you also have to look at Palantir. I mean, let's take a quick look at Palantir. I think Palantir is trading down. Last I checked, it was like 168, 170, which, if I was buying common stock, would actually be a good entry. At least for me, it would be. I mean, this reached, I think, like 220 from its all-time high for Palantir. 207. So it reached, I mean, it's a pretty good gap, between here and there, if it could reach those all-time highs again. But yeah, I mean, if you look at over the last 3 months, I mean, it's just been chopping, right? There's nothing really happening for Palantir. So that's obviously reflecting in the leverage fund. But yeah, Palantir is probably my favorite. It's my biggest payer in my entire portfolio. It has been the biggest payer. I do also hold WPay, as you guys know, NVDW, HOW, and the beloved, most hated redheaded stepchild out there, MSTW. Actually, speaking of MSTW real quick, I just want to check MSTR, see what they've been doing. 160. Damn, I really hope it drops a little bit more. I am thinking about degenning a little bit of money into MSTU and then just forgetting about it. Not financial advice, of course. Let's see. AMDW has been reasonable before the market turmoil. It was. I mean, AMD was like on this crazy run up and everyone was liking AMD. And then, AMDW was obviously doing well and it was paying out really well. Now, not so much the case. It had obviously a pullback. Google also, Google or GOOW did really well. Google has been on an absolute tear with not only the deals that they're making, but also just, I think the TPU story is helping Google out, right? For those who don't know, Google produces TPUs. These are chips that could potentially rival NVIDIA's, like Blackwell series chips or even their new Rubens. I don't suspect so because as good as the TPUs are, it's not something that I don't think Google's just going to start mass marketing and selling these products. Like they're not, I don't think so. Is there a world where that does happen? Is there a scenario where Google starts selling TPUs to other companies or other hyperscalers or data centers? Probably. But I don't know. I don't think I really see it. I think they'll do like specialty orders. And it's because, the customer base for these cloud providers, instead of developing everything on like an NVIDIA chip, maybe they want to develop specifically on a TPU. Because TPUs are very like specific, like specialized chips. They do one thing really, really well. Whereas NVIDIA chips are very broad and generalized. So that is really the fundamental difference between a TPU and NVIDIA's chips. So, again, I think I think it's good for Google to have that, that piece, that part of the AI trade. If they decide to start selling it, I think it would obviously boost their share price. but how much in demand would their chips actually be, right? Again, I referenced this post made by Google's own TPU engineer saying that the market has this all wrong. Because when they announced, when Google had announced that they were selling their chips to, I think, Meta, NVIDIA dropped, Google went up, and this engineer was saying like they don't understand market demand, right? Like people don't understand market demand, and this latest move is an example of that. People are not lining up out the door down the street to buy Google's TPUs, but they are doing it for NVIDIA, right? And NVIDIA has orders all over the world, whereas Google's probably selling their TPUs to Meta, right? So again, just food for thought. Let's see. So Skeptic says KYLD for me. Man, I cannot get into any of these ulti clones or anything like that. I mean, they probably do better. I think Kurv did better last time I looked. Let's just see what it looks like. Down 10%. Yeah, down 10%. I guess that makes sense. Yep. Let's see. Any RecShare ETFs? I don't own any RecShares I don't own anything from RecShares, to be honest. I'm not saying that their growth and income ETFs are bad. Like I liked some of the stuff they had, like their NVII. I contemplated getting rid of my NVDW for NVII. I don't know. There's some things in my mind. Like you can look at the charts all day long. You could compare, right? You could do all that stuff. People always look at the charts, like YouTubers will do these comparisons, but they're doing them at like weird times. I think if you were to stack them side by side, NVII and NVDW on a share per price, NVII looks like it's doing better. It does appear to do better. But I think the volatility resets that these do, because not volatility resets, the weekly resets, because of the leverage that it does, I think it's a little misleading in my opinion. I haven't been able to prove it, but I think the weekly resets on the leverage that Roundhill does is more beneficial than the daily resets that Rex does, or any leverage ETF for that matter. A lot of these leverage ETFs that use, that have like 105, 150, 200% exposure, they have to reset daily, right? That could be bad. That could be really bad. Whereas Roundhill, they do it only once a week, right? So the path dependency problem isn't as like in your face with the Roundhill stuff, but it is with the Rex stuff. Again, I haven't been able to prove it. A lot of people will just refer to charts and comparisons of those charts. I think it's important that if you're to buy any of these ETFs, especially ones that use leverage, when you buy is exceptionally important, right? When you buy is very important, because if you're to buy it as it's continuing to climb and then it has a severe drop, that is going to be very detrimental to the ETF, to your holdings, to the principal, right? Whereas if you're to buy at the very peak bottom, peak fear at the very bottom, a little more beneficial, right? A little more beneficial than if you were to buy at the top. Also, I don't think you should dollar cost average into these ETFs. I think you should lump sum into them, wait for opportunities to pick up more shares. That's the route I try to take as best as I can. So let's see. Michael Hawks says, does KYLD not have a very flexible approach to what they hold, which could help? Does KYLD not have a very flexible approach? They do. A lot of people like Kurv, and again, Kurv is starting to make its way over. A lot of people are starting to become aware of Kurv. Saying that, as they rotate away from the yieldmax stuff, as they rotate away from the Roundhill stuff, or any of the, Defiance, everyone's like, oh, Kurv is so safe, right? Neos is so safe, right? They're the best. They weren't saying that earlier, last year, middle of last year, because they didn't pay out these really absorbent, freaking crazy yields. So now all of a sudden, Kurv is good, right? Neos is really good, right? All of a sudden. And then you have new funds coming out like Tap Alpha. And we covered this before, but There's another person who commented on the harvest. If you're a Canadian, on the harvest stuff like HDiv. So HDiv is I suppose really good. I've never really heard anything negative about harvest. So yeah, there we go. Let's see. Maybe monthly NEOS might be better than weekly. Thoughts on NEOS ETFs? Again, yeah, they're really good. They're kind of like one of the gold standards out there. I don't hold any NEOS. I just don't hold them. I hold XPay as kind of my index based, high yield ETF. So that's kind of where I'm at. Whether I rotate in or out of XPay, I don't think I'm going to be getting out of XPay anytime soon. I'm trying to keep that position there. Again, if we have another severe dip like a Liberation Day 2.0, I'm definitely going to be loading up on XPay, on more XPay. And it's not for the share price appreciation. I'm not banking on the share price appreciation. I would just like to buy more shares at a cheaper rate because it pays I can't say, I got to be careful with the words here. It targets a 20% managed distribution. Okay. That's what it's targeting. Whether it will do that every single year, or not, I have no idea. What they do is they base their distribution on the last day of the year based on the share price of the ETF. So last year in 2025, XPay was paying out, I think, 95 cents a share. And this year they're paying out 89 cents a share. So it's a 6% or a 6 cent drop, but it's because XPay was at a lower price relative to what it was in the beginning of 2025 or the last day of 2024. So again, food for thought. If XPay was to have this crazy run up, then, the distribution would increase again, if at the end of the year. Thoughts on TDAC. So we covered TDAC before. I don't know too much about Tap Alpha. I've seen people cover Tap Alpha interview Cy. You have, I think, Retire on Dividends. I don't know if he's still here or not, but he did an interview with them. I believe he did an interview. I know Income Architect did one. I don't know any of the other channels that interviewed Tap Alpha, but Cy is pretty well received. Tap Alpha is well received. A lot of people have been very happy with TDAC or T-SPY. So, there it is. Like I don't really have an opinion because I haven't really done my diligence on it. But it looks like it's a pretty vanilla, kind of ETF. They have some strategies in there that others don't, that other ETFs don't. Again, I haven't really looked into the ETF or checked the prospectus out. I'm kind of honestly moving away from that stuff because it starts to blur. Like when you look at this stuff so many times, you see it's pretty much all the same, right? It's all the same. It doesn't matter how many strategies, hedging, puts, protection strategies, all that other stuff. Like it all starts to just look the same. And really what you're betting on is the fund manager not losing all of his trades, right? That's really what you're betting on. But, again, like I said, Cy's been well received as far as I know. Let's see. Yeah, Spencer did. Yep. So Spencer, probably Marcos. I forgot those two, but yeah, they do pretty good work out in the high yield space. They cover quite a bit. I can't keep up with them. Like there's a new ETF dropping almost every other week, every other day. There's news around these ETFs. I just can't do it. I can't do like 100 comparison videos. It's just stuff that I kind of lost interest in. I like high yield ETFs. I like the high yield space. I like what it's been turning into. I think there's a lot of lessons learned during the bull market when it seemed like everything was just going to continue paying. Everything was going to continue running up. But I think a lot of investors had learned some really hard lessons about these income products, right? They shouldn't full port into MSty. They shouldn't be full porting into Ulti and then taking out these crazy loans on top of margin, right? I think a lot of people learned, like I said, some very harsh lessons. So yeah, those are my thoughts. Victor Sink, hey, welcome back, man. Hello, everybody. Hope you guys got some buys today. My portfolio dropped 4 to 5% today, but I got more MSTR. Man, you're crazy. You are crazy to be buying MSTR. I am honestly thinking about buying MSTU. I'm waiting to see if I'm scared to buy right now. And again, for those who may have not joined us on the last stream, Vanguard just purchased $505 million of MSTR common stock. Pretty large institutional buy. Okay. You could see from just MSTR, we'll go back to MSTR, but you could see from MSTR that it was just kind of trading flat these last couple of weeks. Yeah, it was just kind of trading flat these last couple of weeks. And it's because it just hit this wall of resistance, right? It hit this crazy wall of resistance. You guys can look at the 5-year chart. We'll look at the 1-year chart, and it looks like around here, it's just hit this wall of resistance. So, you know, some more negative news came out. They might get delisted. MSCI might move. But I, honestly, looking at the MSCI news, which, you know, creates the indexes, I think that was really good on strategy's part. It's really good. And the reason why I say that is because even though MSCI is saying, hey, you'll stay listed, but every time you start diluting your shares, we're not going to be adding those shares to our indexes. Like we don't recommend that, right? So again, I think that's really good because now strategy has to find real buyers of their common stock. So if you've been following MSTR, you understand the whole, like, you know, MNAV, share dilution, the ATM, the perpetuals, why dilution happens, and kind of the whole reason why this treasury exists in the first place, then you start to get a clearer picture that this is actually a good thing for strategy. It sucks because now they're not getting all this passive inflows from all these indexes. But at the same time, this is also good if you're worried about, you know, MNAV and all that stuff. Because at one point, Saylor and Fong, they said, okay, we're not going to hit the ATM if MNAV drops below these levels, right? I think it was like 2, 2.5, 1.5, those kind of levels. They said, we're not going to hit the ATM, right? Or we'll only do it opportunistically. And then like 2 weeks later, they nagged on that and said, you know what, screw that. We're not going to follow that plan. We're just going to keep hitting that ATM, right? So now they're in this point where now they need to find real buyers. They can't rely on passive flows any longer. So I think it's a good thing. I think that's a good thing for strategy in general, because it's gonna force them to be a little more responsible than just constantly hitting the ATM button. Let's see. So we also have from Michael saying, could NEO CSHI be too risky with its treasury holding with 1% boost by selling SPY puts? I don't know too much about CSHI. I've seen it come and go. I've seen the ticker before. Never really looked into it. So it's enhanced 1 to 3 T-month T-bill. So here's the thing about T-bills, right? So this is just my point. All right. If you're going to invest into 1 to 3 month T-bills, right, in your portfolio, like, what is the reason why? Right. I think that is the fundamental question you have to ask yourself. Like, why would you invest in this stuff? If you're investing in it for income, you know, if you're fine with a very small distribution payout, excellent. If you want some portfolio stability, so it's not so rocky, that is something else I look at. Right. And looking at CSHI over the past year, since January, well, it looks like this came out last year. Did it, or did it have a longer track record? Yeah. So, I mean, you guys tell me. Its inception price was about $50 and it's hovering right now at $49.59. I mean, is this a stable asset in your mind? I mean, it looks like it. It had this really nasty dip way down here, down 49, but it's only down, what, 2%? So, you know, that is what I look at whenever I look at T-bills, is what is it complementing in your portfolio? What is it supposed to do? How are you looking at it? What purpose does it serve? If you're just looking to make a little bit of income off the T-bills, I mean, this could be a good product. I'm not going to say whether it is or isn't. I mean, these little spikes up and down, I mean, these really are inconsequential. These don't really matter. You know, it's not really going to move the needle down. And then just over the past year since inception, it looks like August 30th, 2022, this is only down close to 1%. So has it been stable? I mean, most people would probably say yes. So, but again, you're not going to get that growth, right? You're not going to get that growth depending on the age you are, how old you are, you know, your retirement age, your investor profile, as some people will call it. that matters a lot, right? Like I included T-bills in my portfolio because I didn't want portfolio implosion to happen to me where I would have to sell because I use a lot of margin. I didn't want to be able to sell. I wanted to be able to cash out the T-bills in an emergency or just hold it, right? And keep my margin buffer at a very reasonable level, right? So that is why I included T-bills. I no longer hold really T-bills for that anymore. I just hold the cash. Let's see. Victor Singh says, I'm a little bit scared to leverage MSTR. I just started investing 6 months ago. Stay away from leverage. Stay the hell away from leverage. You don't need to be investing in leverage. Definitely don't. If you just started investing 6 months ago, you don't really have a crazy portfolio to speak of. Like you don't have like a, I talked about this on the last stream, but like for newer investors who don't have, like a decent amount, a healthy amount in their portfolio. Let's use an example, throw a number out there like 100K. People shouldn't be screwing around with leverage funds. They shouldn't be screwing around with income funds or any of that. That's my personal opinion, right? They should be looking at growth products. And then eventually when they do reach that 100K, right? Then maybe they could look at that stuff. Unless you want to just try your hand at trading early, and maybe you might be successful or maybe not, but more times than not, go to Reddit and look at Wall Street Bets and see how all these traders lost so much money. They call it loss porn. It's so good. Like you'll see accounts go from like $1 million down to like $50, like overnight. It's sad as hell, but these people do it. So Eric Mark says weak dividend scared money. I mean, yeah, when it comes to this CSHI, I mean, again, the point is not to make a whole lot of money because SGov by itself is whatever the federal funds rate. I think it's like 3.25 right now, 3.5. So, the T-bills are going to probably produce, maybe pump out, 3.75 or 4% for a yield. The same thing with these NEOS T-bills, right? This NEOS T-bill ETF. It's not really going to make you a ton of money. It's just passive, I guess passive income, right? It's very low. It's not those sexy 20, 100% yields that everyone else has. But, when you're in retirement, a 5% yield off of, $500,000. I mean, you guys do the math. That could just be an extra, I guess $25,000 in the pocket from not doing anything. And it's completely safe, completely flat. I mean, it might make sense, but for, again, a middle-aged, younger person, yeah, T-bills probably don't make much sense unless, again, they serve a purpose in a portfolio, stuff like that. Spikex, hey, welcome. I don't think I've seen your name before, so welcome to the channel. My port is 404020 who PLTW blocks. I am getting smoked. Yeah, a lot of us are getting smoked. Those of us in the roundhill names. Blocks obviously is getting smoked. I mean, it's basically a proxy for crypto, right? It's a proxy for crypto. You don't have to look very far to know why it's getting smoked. You just look at Bitcoin, right? You can just look at Bitcoin and you can see what's been happening. I mean, look at that. 114,000 and we're down 20% in 3 months. Okay. So doesn't take a scientist to look at these numbers and just realize why Blocks is doing bad. But Blocks you can look at a alternative to Blocks. It doesn't pay money, right? But it's a crypto thematic ETF. It holds similar holdings to Blocks. And this ETF, is basically just an appreciation play, right? And this did really freaking well in 2025 up until October, right? That large liquidation event that occurred where Bitcoin or where crypto had, I think it was like a $1 trillion in outflows or something, like some obscene number. It was like $1 trillion that left, or 200 million traders got liquidated. Like, it was a pretty big crypto event, and obviously it has not recovered as well, right? So you have to take what's going on in the broader market to understand what's happening with Blocks. But Blocks has some pros. It does hold, I think, some Bitcoin. So if Bitcoin was to have a rocket up, crypto companies will probably follow suit. So you just got to kind of be patient. Let's see. Thoughts on ET? Thoughts on ET? Energy transfer. I have never seen this. This is new to me. Oh, okay. So Energy Transfer LP engages in natural gas pipeline. Natural gas is about to have its run up, and I'm speaking only as an observer. I don't own anything in nat gas, but the reason why I say that is because of the data center build out. Right, if the data center stuff, it needs power. Right, they need power. All these power stations are coming online, and since nuclear power plants take years to build, and a ton of uranium, another precious metal people can look into, or another metal people can look into, or mineral, excuse me. These data centers are going to have to rely on some type of fuel source, right? Or excuse me, not the data centers, but the power stations, right? The infrastructure is going to have to rely on some type of fuel. And that fuel is probably more or less going to be natural gas, right? So natural gas could have its year this year as a commodity. So ET might make sense for those who are interested. I have no idea what ET is. I've never done any due diligence on it, but from kind of like an observer macro perspective, everything is centered around the data center play and the AI trade, right? So everything is centered around that. So you look in layers, right? You look in layers. You see you have AI software, the Palantirs at the top, the Microsoft, the Googles. You move a layer down, you have the data centers. You're gonna have SMCI, right? Supermicro. You're gonna have Dell. You're gonna have Cisco. You're gonna have HP. You're gonna have NVIDIA, right? You move a layer down, you have the semiconductor space. You have all the semiconductors that go into that hardware. You look a layer down, and then you start getting into power, wiring, copper, infrastructure, fiber, HVAC to power these data centers, right? You look a layer below that and you have power, actual electricity, right? Where's it coming from? What's the infrastructure? And then where are they getting the fuel? And then if you look even deeper than that, for the semiconductor space, you need metals to build these semiconductors. So where are they getting that stuff from? So again, looking at it from layer looking down, right? So this could be a good play. I'm not going to say it is or isn't. I mean, if we look at year to date, let's see. I mean, it looks like it's doing pretty good so far. Up almost 6.6% over the last year. Yeah, it was just kind of on a downward trend. And let's see what its max looks like. 2015, 34. I don't know what happened here, but something must have happened. And then, yeah, you had April, you had Liberation Day. No, this is not it. This is not Liberation Day. Excuse me. This is 2020. Yeah, so this is the pandemic, the germ. Yeah, so, I mean, I don't know. ET could have a run-up. Bro, I have not lived in the United States in a long time, dude. So I don't know, of some of these companies. Like the last one I heard was, what was that company? Let's see, ET. There's ET, and then there's, oh my God, Duke Energy. Yeah, so Duke Energy. Yeah, Duke Energy is the other one I heard of. But I only know Duke Energy because I was looking at real estate in I think North Carolina, and I had to know where the power was coming from, and they listed Duke Energy as the power provider. So that's the only reason why I know of Duke Energy. But yeah, I don't know of ET. Again, guys, I've been living outside of the United States for pretty much the last 9 years. So. Victor, I didn't know that. I did not know that about Strategy buying 23,000 Bitcoin today. That is crazy. I saw Ethereum. I saw BM&R purchase a ton of Ethereum today. But I didn't know about Strategy, but that makes sense. I mean, they always buy on the weekends. So let's see. Michael says comms CAPI IE is another monthly yielder, 14%, yet the risk profile is hard to grasp. Skeptic has covered this quite a bit. Skeptic has covered that one quite a bit. Yes, the auto callable. There's an interview with this guy on this ETF as well. I think it was a fund manager. I don't even remember his name. I just saw it like on YouTube. I never actually took a look. Again, like I can't keep up with all the new ETFs that keep coming out. But yeah, using total return swaps based on a large cap laddered portfolio of auto callable yield notes. Now, I remember the feature of this one was that as long as within a month, I think as long as in a month, it doesn't have like a 40% drop, this ETF can't go to zero, I think was like the big takeaway that I heard. Let me know in the chat if that was the case. I think that was one of the features that they had built into this, or one of the issues because of the auto callable strategy. Skeptic says ET pipelines are huge. They're on every energy and MLP ETF. So a lot of passive inflows. So that's good. MLPI ETF has a basket of utilities with options boost. Yeah, I've been hearing a lot about the MLPI ETF as well. Again, debasement trade, we're talking about, it's not that the US dollar is going to zero. It's that it's becoming less valuable. So investing in real assets, things like, gold, things like silver, things like metals, but also not metals, things like MLPI that holds real assets, things that actually produce cash flows or get money, right? Energy is a big one. Energy infrastructure is a big one. Airports are a big one, apparently, right? Toll roads. You have even harbors, right? Even harbors are considered real assets. Real estate, right? Real estate is considered a real asset. So MLPI, yeah, I'm not surprised it's probably going to be doing really well this year because, again, it's holding real assets. Let's see what else. All right, guys, I think that's going to be it for me. I got to get my pudgy self to a gym. All right. I'm trying to stay consistent and disciplined this year. And definitely we're only 21 days so far into the new year. So I am trying to stay consistent and make sure that I have this year pretty healthy. Because last year I was doing really well up until about October when I had a vacation and then I got super sick. Right. Yeah. I think it was before the vacation I got really sick and that took me off my game. And then October, November, December, I was pretty much just off YouTube, traveling around, friends and family, that kind of deal. But also, I just never could go back to the gym at that point. Like it was not going to happen. So, but anyways, guys, I appreciate you guys joining me on this live stream. Hope you guys had fun. Hope you guys got a lot of stuff, a lot of value from it, because that is my intention for doing these live streams. So thanks for cutting it up with me, joining me for the coffee hour. Outside of that, I will see you guys in the next video, the next live stream. You guys have a wonderful night, a wonderful day, wherever you are in the world.